The moment you have finally been waiting for has arrived, and you think you are ready to buy your first home. You may have been renting for a long time, or maybe you have been staying at your parents' home, living in their basement, and you're just sick and tired of being at the mercy of your landlord or having to play by the rules that your parents have set forth in their home. You figure, I'm a grown adult and I need to start acting like an adult. So in your mind, you think that the best way to start acting like an adult is to buy your own home. And I want to say to you as a realtor that this is an amazing thought, that you are thinking on how you can be independent and self-sufficient, and you're wanting to start building wealth in your life. So where do you begin from here? So today we're going to discuss how you can save up money for a down payment to buy your first home. My name is Cherilyn Williams. I'm a buyer's realtor from Chicago, Illinois, and the west suburbs, helping you build your dreams through real estate. And if you're needing help with any of your real estate needs in the Chicagoland area, please reach out to me. My contact details are in the description. And if you like the information in this video, you should check out some other amazing videos that I have all about home buyer education. Also, do me a favor and hit that like button, comment, share, and subscribe to my channel for weekly real estate content made just for you. Okay, so saving up for that down payment for a new home may seem so daunting, and especially if you're starting from scratch with no help from your parents or family members, and you're not a trust fund baby with millions. But I don't want you to have or possess any negative or defeating thoughts, because if you listen carefully and follow exactly what I say, you will have no worries or problems saving up for a down payment for a home, no matter how you are starting your home buying journey. Now, first things first, and that is you need to look at your current budget. How much income do you make from your employer, and how much of your income do you spend monthly? It's important that you look at how much your current rent payment is right now and determine if you are comfortable with that payment. If you don't pay rent because you are living at home with your parents or something, you need to figure out how much you would like your monthly mortgage payment to be. The great thing with not paying rent already is that you can really save up a lot of money to buy a home. So be sure you determine what you want your monthly payment to be. If you want to buy a home, do you feel comfortable with your rent payment that you're paying now? Or do you need to scale it back some in order not to be in over your head with a monthly mortgage payment? If you feel like you're not stretching pennies every month and living paycheck to paycheck to live in your current home, then maybe you can have a mortgage payment around the same amount or just a little higher than what you are paying for rent currently. Next, you need to look at how much money is going out every month. And here you really need to be honest with yourself. You need to figure out the things that are necessities, like your utilities or maybe your Wi-Fi and cable bill. You need to look at any car payments that you have and any credit cards or student loan debt. You really need to determine what the necessities are of your bills, because this is so very important. For instance, paying your gas and light bill will be a necessity to live, but things that aren't necessities, the best thing you can do is get rid of them completely and get them out of your life and eliminate them. For example, if you make it a habit every day to go to Dunkin' Donuts and get your favorite coffee latte, you may decide to forgo doing that and make your own coffee at home to save you some money. If you're subscribed to certain online apps like a Netflix or Amazon Prime, where they're taking automatic monthly payments from your account and you don't really use them, maybe it's time to get rid of them so you can start saving money to buy a home. Often you don't even realize how many automated accounts that you have that suck money from your bank account every month because you often forget about them. But you could really save up some money by getting rid of some of these accounts you barely use or don't use at all. So sit down and budget all these things out on some paper or create you a budget spreadsheet to determine all of this. And remember to be absolutely and completely honest with your budget. Now, once you figure out your budget, I want you to create a separate savings account specifically designated for buying your new home. You can call it a special name like My New Home Savings Fund or whatever you wish, or you don't have to have a name for it at all. But the idea here is to not commingle this money with any of your other accounts. It will only be used for your housing fund. Now, every time you get paid from your job or whenever you wish, I want you to set up automatic payments into your housing fund account. You can determine how much and when you will have money distributed into this account. Maybe it will be $100 weekly or bi-weekly or once a month. It is whatever you feel comfortable with. And the key here is that you must be consistent with it. The reason why you want it to be automatically deposited is because you'll just forget all about it and you won't even realize how much money has accumulated into your account over time. And one of the most important things is I don't want you to touch it ever if you can. I'm telling you, it works. I've done it with so many things in my life, and especially when I was saving up for a hefty down payment for my first rental property investment, this is exactly what I did. And even if there are times where you can put a little more money into this account because you have a little extra money to do it, then do it. You will feel so proud and accomplished that you were able to save money for a new home. And what's really great is if there are two of you saving for a house fund, like if you're buying a house with a spouse, you can save up money even faster than if you're a single person. So definitely give this a try. And also, if you want to, maybe take on a little side hustle job to make some extra money to put more money into your savings pot, why not do it? That way you can save up even faster. And I'm telling you, it will be well worth it on closing day when you sign the paperwork and you get the keys to your new home. Now, as you're saving money for your down payment, remember that you also have to have money for your closing costs. The closing cost fees are going to usually be a lot less than a down payment, but you still must be prepared. Closing costs are all the fees it will take to close on your home, from hiring a title company to doing the document preparation to paying for your title search and your realtor's fees. You will need money for closing costs, and the closing costs are usually 1 to 3% of the purchase price of the home. You will also need a little money in reserves for emergencies. A lender will want to see that you are not spending every last penny that you have in your bank account on your new home. They want to see that you have at least 3 to 6 months in reserves in case of an emergency, like unfortunately if you get laid off from your job or anything that comes up unexpectedly in your life after moving into your new home. Also, when buying a home, you will have a few other upfront costs that won't be as expensive as a down payment or closing costs. But these are some things you need to be well prepared for. Like you will need earnest money when you first write up a contract. You'll also have a home inspection fee and an appraisal fee. The important things up to this point are to figure out your expenses, open up an automated account for savings, and stay consistent with your payments into that account. And be prepared for all the things you must save up for up front to buy your home. Now, the next thing that I want you to do when you're saving up for your down payment is to find out what type of loan you want to save up for. Because knowing which loan type you want or can get qualified for will definitely help you determine how much you should save. Speak to a lender to determine what type of loan you could qualify for right now, looking at your income and your debt to income ratio and your credit score. Your lender can offer you suggestions on what you need to work on for the next few months or year to put yourself in a better standing to buy later. But it's good to see where you're at right now so you can have a base or a starting point. Now, if you want to put down the lowest down payment possible of a 3 or 3.5% and your credit score isn't in the best shape, you'll be looking at a FHA loan, which is a government insured home loan. And you will get a higher interest rate because, of course, your credit score is lower. So even though you could possibly qualify now for a home with not such a great credit score, it might be a better idea for you to wait and work on your credit so you can be in a better position to get a lower interest rate and better loan terms and maybe qualify for a conventional loan. But it's really up to you and how bad you want or possibly need a home because everyone's circumstances are different. But let's say you put down the same lower amount of 3.5%, but you have a great credit score. You could qualify for a conventional loan where you can get a better interest rate because your credit score is better. Now, of course, the more money that you put down, the more you will look favorably into getting approved by a lender, and also the lower your monthly payments will be. So you see, the more stake you have in the game by putting down more money, the lender is going to like you very much and want to loan you money because you are less of a risk to the lender. If you put down at least 20%, you can avoid paying primary mortgage insurance with your monthly payment. And then you also have a good amount of equity immediately when you buy your home. But you know, having 20% for a down payment is not easy all the time. But putting down, even 5 or 10% is an excellent way to get into the home buying game. Now, there's also the VA veteran loan if you have served in the military. And there's also the USDA loan, which is for buyers living in rural areas, where with these loans, there is no down payment required at all. And all you really have to pay are your closing costs. So be sure to speak with the lender to see what your choices may be so you can work your way to saving up for the loan that you want. Also, one other thing I need to mention to you is that your credit score is key in all of this when you are buying a home. Even if you have a great income, but you have a bad credit score, you could end up getting a higher interest rate and the worst terms. So please work on keeping your credit healthy or improving it while you're saving money for your home. It's so important. Now, another way to save for your down payment is to check into down payment assistance programs with your state and in your local counties. Down payment assistance is a great way to cover part or sometimes all of your down payment and closing costs. There may be certain requirements that you must fulfill to qualify, like doing a 4-hour homebuyer workshop, and the home you buy must be your primary residence, but man, is it worth it, and boy, does it help you a lot. Unfortunately, currently, there are many state-funded down payment assistance programs that are on hold and have limited monetary resources. But still, I want you to check around because there are still some available programs out there for you. You just may have to dig a little bit deeper and ask around. I also want you to check the county where the home you want to buy is located. Many buyers don't realize that some local counties also offer down payment assistance programs. You can ask your realtor or lender to help you find some down payment assistance programs as well. But like I said, it may be a little bit harder today than it was like maybe 5 or 10 years ago because of states not having a lot of money allocated for home buyers anymore. But just check around. Now, one last thing I want you to think about when saving up for a down payment is your time frame. The longer time you have to save, like if buying a home is not for a few years out for you, you have a longer time to save money, and you probably can save a lot of money in that time. If you're a go-getter and you have made up your mind that you're going to be disciplined and you're going to be aggressive to really do everything in your power to get all your ducks in a row and lined up to buy, you could really stack up a nice chunk of cash quickly. So your time frame will really depend on you and what you can do or handle. But if I were you, I would try and plan a good year out before you want to buy. So just to recap, look at your budget and what you can eliminate of your expenses to save more money. Then I want you to set up a house savings account where money is automatically drafted into that account, and stay consistent with money being deposited, and don't you dare touch it. While doing this, tackle keeping that credit high and paying off little debts that you can eliminate. Speak to a lender to see what are your possibilities in getting a loan where you currently stand, and then see how you can improve your chances of getting a better loan by putting in some work. And don't forget to speak with your lender and realtor about down payment assistance programs. And then last, you want to determine your moving time frame. Just by organizing yourself and creating a plan, you can fulfill one of your biggest dreams and accomplishments, and that's becoming a homeowner. Now, if you are needing a realtor to help you with budgeting or laying down a step-by-step plan to help you buy a home, or if you're looking for a home in the Chicagoland area, reach out to me, Cherilyn Williams, your buyer's agent in Chicago. Thank you for watching.